Okay, let's welcome on board then Deven Choksey and talk about what he's making of the market right now. Deven, hi, good morning. Great to have you on the show. Lots to talk about, Deven, but let's first start off with Reliance. Finally began its move after a stark underperformance in the last 1 year or so. And now this new Jio phone launch, Deven, you think it could really move the needle for Reliance?
Good morning, Aisha. Well, I think let us look at numbers, how exactly they work out here. Reliance on an annualized basis is about 1 lakh crore revenue. Reliance Jio platform, I mean, is about 1 lakh crore revenue. Uh, about 50,000 crore worth of EBITDA on an annualized basis. Based on the last quarter's results, I think one can easily draw this. And this particular business on a standalone basis is growing at a steady rate of around 20%. So with the 5G launch and higher amount of data consumption, it is safe to assume that this year probably without factoring into account, I think this new launch that they have done, without that, I think they would be somewhere around 1,20,000 crore and 60,000 crore plus on EBITDA from the business which currently working for Reliance Jio platform. Now add to this the current business, I think, or the new business, which is Jio Bharat business, which they are talking about, wherein they are totally they're addressing the addressable market rather, I think, of around 40 crore phones, which are operated under 2G, which are being operated on the networks of Vodafone Idea, or for that matter, Bharti, or for that matter, BSNL. Now, this particular market of 40 crore phones, they are targeting about 25% of that market in first year of launch, with about 1,000 rupee worth of phone. So 1,000 rupee worth of phone on a 10 crore possible acquisition of customers could be around 10,000 crore worth of revenue. And they are talking of 123 rupees per month kind of a cost for services, that is the data supply, in which you are going to have movies and music and all not. I think everything is going to be there. So from that point of view, I think they'll be collecting about 1,500 rupees per annum from a customer, so which is 2,500 rupees, 1,000 plus 1,500. Totally 25,000 crore worth of additional revenue coming from 2G conversion, and at a 50% EBITDA margin, I think it could be somewhere around 12,500 crore worth of EBITDA. So what the company is talking about is adding at least 20-25% to the new revenue through this 2G the Jio Bharat, and I think similar amount, I think, by way of the EBITDA. So definitely Jio platform, this could be, I think, the biggest advantage that the Jio platform would have with this kind of launch that they are making. Not forgetting that I think it would end up adding at least 10 crore new customers in the current year under this proposition.
Morning, Deven. Let's get in your take as well as to what the outlook is on Bajaj Finance. We were actually likening it to, a flat selling at Nariman Point versus that in the suburbs, saying that it's been very consistent and therefore commands that kind of premium. Customer franchise has grown, the deposits have increased, new loans booked, has all been robust. Is this trend likely to continue, that outperformance versus its peers?
So, when Bajaj Finance is doing exactly same what IDFC did in the decade of 90s and first decade of 2000. That means they are clocking their book at the rate of 30% rate of growth. Their AUM has been steadily growing at the rate of 30%, and that is the engine that they want to run. I think this is very powerful because I think when you start operating with a measured growth, you produce also the performance, which is, I think, definitely predictable. Out here, what we are saying is that every 3 years or 3.5 years, I think the company would possibly double the size of the AUM, which is very good visibility as far as investors are concerned, and that is where the company gets a premium valuation on price to book. On the other side, if you look at the kind of model that they are operating, they are successfully converting one after another retail segments into their fold. And each and every segment, I think, with a minimum portfolio of 500 crore for the book size, is being targeted, and they are converting them into the product, which according to me, I think, works very well for a business, I think, where the predictability requirement is very high. So from that perspective, I believe that the business of the company remains steady. Investors like predictable growth as well. And at the same time, I think the 30% kind of a growth spells out to be at a CAGR level. If you produce 30% growth at the end of 10th year, you're talking of 1400% growth in the business. And that gives you a simple average of about 140%. That is what I think this particular company is operating with. So that is where they are getting the premium valuation. We like the company from all perspectives, including the subvention pricing mechanism they are successfully implementing. We like this company from those perspectives and stay invested into this company.
Devin also wanted to understand what happens to IDFC First now. The announced swap ratio for the merger clearly implies a holdco discount of about 6.3% versus the earlier 19.5%. Viewing the swap ratio, you think it's going to be relatively positive for IDFC shareholders, and thereby I think all that excitement in the stock even yesterday?
I don't know. I think I'm slightly lost on this particular aspect. I think this particular company has earlier demerged, then again they are merging. So somewhere I think I'm not very clear about I think how exactly things are going to be shaped up. However, having said that part of it, I believe that I think there is not major change which is happening at this point of time as far as I think the book value of the company is concerned. The merged company's book value probably I think is not giving any meaningful kind of a rise at this point of time. That is what I have seen from the first glance of the numbers. Maybe I think I would take some time to study this little bit more in detail and see where exactly further synergies can be established. But as of now, on the face of it, I'm not getting fully convinced about I think the synergies that is coming up under the merged company. So we'll have to wait and see how exactly things happen. Maybe learn more about I think it from the management directly to understand in detail.
Right, okay.